So we talked a bit about M&A. Can you break down more or less how the process works from going and pitching to the end result, and how much does it usually take? And maybe can you divide between how much it takes in the public sector and the private sector?
Yeah, so I'll start with this example of a sell-side role. So that's when we're helping a company sell a division, or we're helping a bunch of shareholders sell their stake in the business. And so what will normally happen is we'll be pitching alongside boutique investment banks or other big four companies, and we might get sort of maybe 3-4 weeks of preparation time. So we need to prepare this proposal document, and so as an analyst, when you first come in, you'll be spending a lot of time doing these documents. And so in these documents, you'll have, I suppose, you need to show 3 or 4 key things. One, you have got an understanding of the business that's being sold. So you need to understand what its strengths are, what its weaknesses are, what are the market trends that it's facing, and how do these market trends impact the potential transaction. So do these trends mean that a certain group of buyers will they be more interested because of this trend? So you need to understand what's going on in the market, what's going on in the particular industry. Another thing you need to understand is the buyers. As I said, you need to identify who is potentially going to buy this business, and why would they be willing to buy this business. Have they made previous transactions in the same space? Have they got new funding? It might be a company that's recently backed by private equity. So the private equity firm might be looking for bolt-on opportunities. So you need to have a good set of potential buyers, and you need to rationalize why they might be potential buyers. Another thing that you need to convey is what value are the shareholders going to get for this business or for the shares, because naturally they'll want to maximize the value, and you need to come up with a recommendation about what value the business is going to go for. And so you need to do some analysis. We might do a DCF if we get the right financial information, if we get the cash flow information, but generally we'll definitely do precedent transaction analysis. So looking at transactions in the same space of similar companies that have happened before, and what the value have been of these companies being sold, and then comparable companies or comparable listed companies. So those are the valuation methods that are covered. And then we'll also talk about the process. I suppose the fourth element is they'll want to understand how are you actually going to deliver this project. So when is it going to happen? Who's going to take responsibility? And so we convey all that information during the proposal. So it's quite a large document, getting all the right information across. But again, every pitch is different. Some shareholders are very familiar. They might have sold 2 or 3 businesses before, so they understand the process. So we might not spend as much time, but there might be, or it might be the case that it's a shareholder that's never sold the business before, so they want to understand everything, what you're going to do for them. So every pitch is different. So that's a pitch stage. So we do that. We get sort of 4 weeks preparation sometimes. Sometimes we get 1 week, which is challenging. That's when the late nights come in. And so after the proposal, if we are fortunate to win the project, we have a sort of kickoff meeting where we get sort of into the skin of the business. We understand exactly what the business is about. We start developing relationship with the CEO, the CFO, and we start preparing this document, which is called the Information Memorandum. And so this is the main sales document where we highlight everything that a potential buyer will want to understand of the business at a high level. Clearly, we can't highlight everything. So this might be a document which is between 60 to 100 pages long, sometimes even longer. We'll talk about what the business does, who their customers are, what trends it's facing, what its financials are, what its financial forecasts are, which is really important. and then what the operations are like, the supply chain, everything. So when someone reads that document, they'll have an understanding about why, firstly, why they should invest in this business and what makes it a great business. So those are, I suppose, the key things that we're trying to get across. So as an analyst, you'll be spending a lot of time writing these information memorandum documents. You'll be writing the sort of first draft, the second draft, and then you'll be working with your manager or your associate to refine these documents. So yeah, once the documents are complete, we then go out into the market and distribute this document to potential buyers. And naturally, you'll then have questions that come off of these documents, this document, and then we're answering questions for these buyers, just explaining what are the key sort of investment highlights. And then we sort of get sort of your first offer in from these potential buyers, anyone that's interested. These are called non-binding offers. There's no sort of obligation that comes with it, and then we take these offers and then present them in front of a client and see what they feel about them. Are they happy with them? And if they are, then we'll pick maybe 3-4 companies, it might be even more than that, that go and get more information. So they will then have access to something called a data room, where you get much more information about the financials, about the operations, even sort of regulatory documents. And so then the buyers can go into these documents and do their due diligence. And so here they might appoint due diligence advisors from their side, so buy side due diligence advisors, and so they'll ask hundreds of questions, maybe thousands of questions of you and the company. And so you as the M&A advisor have to be the sort of first point of call in terms of these questions. And so any questions that you can answer, we will answer, and then you then relay the questions which you can't answer to the management, and then you'll get answers from them. So there's a lot of back and forth in terms of answering all the questions. And so again, as an analyst, you'll be managing the data room, you'll be managing all the questions. There's something called a management presentation in this stage as well, where the management team will present their business to the potential buyer. And so then they can ask direct questions. And so again, this is putting the business in the best light in front of the potential buyers, trying to maximize value. Then you'll have another round of offers. So you get a final offer sometimes, or it might be another round of offers. And so the buyers will put on paper what they're willing to pay for the shares of the business. And then, you'll again sit down with your client and understand whether they're happy with it, whether they choose one particular buyer. And then you might go into something called an exclusivity phase, where that buyer is the only one that you're talking to, and they will have further questioning, they'll do further due diligence. And this is where it gets sort of really deep into the due diligence. You might look at tax issues, you might look at operational elements, you might look at IT infrastructure. And so again, you've got your M&A integration team that I spoke about earlier during the interview, where they might be appointed, and then they will ask particular questions about how are we going to integrate these two companies together. And so again, this phase might last a couple of months, it might last 1 month, depending on how things go. And then finally, the lawyers will also play a part in this. They'll be completing, or they'll be trying to finalize what's called a sales and purchase agreement in the UK. The SPA document, which is sort of lists down all the exact sort of rules by which the shares are being transferred, and every single sort of eventuality sort of covered in this SPA document. And so hopefully everything goes smoothly, and then you come to a completion where the document is signed, and then the funds transfer to the relevant parties. So that's the entire process. Clearly, there's a lot of work that goes in it, a lot of back and forth in terms of different buyers and questions and all this kind of stuff. And then I suppose the most interesting thing to me is the negotiation aspect of it, and how we can sort of go back to particular buyers and trying to sort of get more value out of them. That's probably the most interesting element to me. Yeah. But yeah, it's an interesting process. But yeah, that was a sort of very high level run through of it.
Okay, so it might be high level for you, but I think you went pretty much in detail for those who didn't get the chance to see that firsthand.